I would say that one of the few things that the United States still excels at is branding, uh, which is marketing speak for bullshit. Um, the Inflation Reduction Act was a pretty title around something that should have probably been called the Inflation Exacerbation Act. If you take the Inflation Exacerbation Act and then you marry it with the 2023 budget, which is the most ungodly spending bill I have ever seen in 50 years of being horrified at my government's expenditures, uh, you have a certain, well, let's just say if I was looking at it from the outside, I would just laugh. Sadly, of course, I am what they would call a citizen, and I call chattel. I'm one of the intended victims of the Inflation Exacerbation Act and the 2023 budget. I think around the world, people need to be concerned about this because the United States continues to drive the world's economy. The United States is still the world's mouth. We provide 23% of world GDP. And when you have a budget like the United States budget, which forecasts a $2 trillion deficit, may it only be that small, while continuing to increase off balance sheet and on balance sheet liabilities that already exceed, including off balance sheet liabilities, $120 trillion, the entire world, not just the United States, has reason to be concerned. Uh, it's not my want, but I think I actually understate the problem. I try to do it with arithmetic rather than adjectives. But the truth is that if you purport that you're going to control inflation with on balance sheet and off balance sheet liabilities exceeding $120 trillion and a $2 trillion deficit, um, you are, I guess you're misleading dumb people. And I guess you're ignoring people who can do arithmetic. Sadly, I guess those are two disproportionate populations. But it actually is serious. It probably is. It probably isn't serious until it is. But it's very difficult for me to see how you reconcile um, that contradiction. I don't see them having the ability to borrow all of the deficit uh, at interest rate levels that exist today, which is to say, if you are running 7 or 8% CPI stated inflation and you're paying 4% on a treasury, what you're saying to the lender is you should be willing to accept a 3% compound annual negative real rate of return on your lending. From my point of view, no thank you. I get that arithmetic. So if you run a $2 trillion deficit, and by the way, the deficit will be higher because the $2 trillion deficit uses last year's interest rate as the implied interest rate on this year's debt. Uh, it would seem to me that the only way that you deal with that is that you print. And if you make more of something, you certainly don't increase its value. I guess you understand in a very full sense what I think of the Inflation Reduction Act. When I think a commodity is both due for a rebound and is unpopular, you'll recall the uranium boot camp,
Yes.
which I did last year. Another metal where there was substantial misinformation available to investors. Those people who were buying uranium, like those people who were buying silver, were often doing it for the wrong reasons. They had information around the market which was causing them to make a mistake. Make no mistake yourself, when something is out of favor, it's cheap. And the time to buy something is when it's cheap. If you look back at silver over time, a few things stand out. The first is that silver moves in the second half of precious metals bull markets. And I think that we're coming into the second half of a precious metals bull market. In precious metals bull market, the fear buyer comes first, and the fear buyer goes to gold. But when the momentum is established by gold, the more volatile metal, the poor man's gold, silver, takes over leadership, moves further and moves faster. The very fact that silver is out of favor coming into what I believe is the second half of a precious metals bull market is really intriguing to me. The most volatile of all asset classes that I know in commodities are reasonable quality silver equities. There just aren't very many of them. And when the metal itself delivers momentum and the generalist investor's money tries to squeeze itself into the silver equities, there isn't enough market cap to hold the money. I've seen it happen twice before. There are probably 100 purported junior silver miners worldwide, most of which only have silver as a name on the share certificate. That is to say, they're silver miners, except they have no silver. One might reasonably expect them to underperform in a good market. There are, however, 15 or 20 speculative candidates that I think will do extraordinarily well. I remember leading the first financing of Pan American silver at 50 cents and seeing it go to $42. So the reason I'm doing the Silver Summit is while I don't expect actually moves in that order of magnitude this time around, I think that 5 baggers and 10 baggers involving reasonably good companies could be fairly commonplace. And I like the fact that I get access to all of that upside in a sector where there's almost no competition, where there's no investor favor. I like too, I guess because of the fact that I'm pushing 70 years old, that I've seen this happen 3 times before in my career. I might make some new mistakes this time. That's always possible. But I've made the old mistakes, and I've learned through things like the Uranium Summit, the Uranium Boot Camp, how to help investors, if they pay attention, avoid the worst mistakes that they might otherwise make. So I'm really attracted to it. We're going to have some of the most successful silver entrepreneurs over the last 50 years, Ross Beatty, Bob Quartermain, talk about how you build multi-billion-dollar silver companies, talk about how their experiences can help investors understand the do's and don'ts of silver. We're going to have an overview of the silver industry, the same way that we had an overview of the uranium industry in the Uranium Investors Boot Camp. We're going to talk about how to own physical silver. We're going to talk about how to own certificated silver. We're going to talk about the do's and don'ts of silver ETFs, but mostly we're going to talk about the silver equities. And that's an easy thing to do because the number of good ones relative to the total number of entrants is very low. So we'll be able to use real world examples. We will have exhibitors. And Shay, exhibitors, as you know, at my conference, every one of them are owned by me or by accounts that I manage. Now, that doesn't guarantee that, sadly, every stock I ever bought goes up. What it does guarantee is that I know the companies that will exhibit with me well enough that I have invested in them personally.